Good afternoon. My name is Mike Hellman. I'm the Risk Management Director for Comark Equity Alliance.
I'm Trent Matt. I'm the Risk Management Advisor for Oklahoma.
And I'm Matt Hartwell, Risk Management Advisor for South Central and Southeast Kansas.
We wanted to take a minute today to kind of get together and talk about how wheat harvest went in Oklahoma and Kansas and the Texas Panhandle. Trent, here in Oklahoma, I think we were pretty happy with the way the yields came through. Talk a little bit about what we saw out there on the wheat harvest.
Oh, geez. It was quite a wild year. I mean, early on here, right around the Enid area, and as you go further south, I think leading up to harvest, we had a lot of questions about quality and how fungicide applications had gone because we started seeing rust show up, and we were seeing some of our stands get fairly thin, and drought was creeping in, and then we saw some dead spots in fields and all these things culminating up to the point where we weren't quite sure what kind of a wheat crop we were going to have. A lot of producers concerned, they didn't want to forward contract, and heard a lot of stories about 30 bushel straw or 20 bushel straw out there. But as a company, we were kind of excited because I've been doing stand counts out there. It wasn't hard to find 40 and 50 bushel stand counts. But you're always worried about that because you're like, well, do I believe that number? Is that going to end up in the combine? So then once we got rolling, some of our better quality wheat did have fungicides applied to it, and we saw some pretty decent yield numbers. If you want to talk about what you heard out there. But
yeah, overall, I think everyone was pretty happy. There was some stuff out there that went average, but coming off the past 2 years, average was a win as well. I feel like, especially where we went so long without rain this year. But overall, the yields were good. Guys were happy. We were able to get out there and get it cut out pretty quick. Oklahoma went by pretty fast. So overall, I think everybody was pretty happy with the way the wheat harvest went. Matt, they're in Kansas. I know they're down southeast of Kansas. They're still cutting a little bit, but overall, what were their thoughts? And how much is left to still be cut out up there, you think?
Overall, everybody was really pleasantly surprised. I think coming out of dormancy, it was kind of a tone of cautious optimism. Last 2 years had been below average moisture, below average yields, but I think that kind of set the stage for above average potential, and that's what people saw materialize this spring. You had some carryover nitrogen that was beneficial to the crop. You had cool nighttime temperatures in May. All those variables kind of aligned, and for the most part, a lack of disease pressure. So people, by and large, their yield expectations were exceeded as they got through harvest. And we're just at the very tail end of getting the last bit out right now.
What about the soft wheat crop? How is that?
Soft wheat crop had to deal with some adversity. They had an excess of rain that settled in, kind of starting in late March. High disease pressure, but they typically use pretty high management practices, and so they throw the inputs at it, take care of the disease pressure, and that definitely paid huge dividends this year in terms of curbing scab and some of the things that they can face. Quality issue wise, their crop, even though they did probably lose some off the top end due to the excess of rain, they still were able to preserve a lot of bushels and a lot of quality from their high management practices. So still in the category of pleasantly surprised with how their outcomes were yield wise.
That's something I noticed, especially with hard red wheat. As you get to the Oklahoma border and go north, less disease pressure showing up, and even better yields because of it.
So with wheat harvest being a success, the one thing that's kind of been a disappointment to producers has been the price and how we've seen it decline. Friday, the USDA released their stocks and acres report, and there was some surprises in there that kind of took the market back. You saw the corn market really drop back on Friday. Talk a little bit about what kind of took you guys by surprise and some of your takeaways from the USDA report on Friday.
So I know the bulls were really looking for a corn planted acres number to be below 90 million acres. That was kind of the pivot point. There was a bearish surprise in that report. They came out with 91.5, 91.6 million planted acres of corn, and the market really reacted to that number. That in conjunction with the carry-out situation, the fact that there's a lot of bushels still stored on farm to the north of us, and the crop so far this year has had pretty ideal growing conditions, that kind of created quite the downdraft on the corn market, at least.
Yeah, corn's just suffering from a lack of reason at this point. Anything that's bearish is going to really hammer it hard. And like you said, a trade guess is somewhere in that 90 million acre range, and we see that 91.6 number come out. and a lot of angry producers. That we know about the flooding that's going on, and we know about the production concerns and the early dryness in the Eastern Corn Belt, and then the opposite of that is you get to the Western Corn Belt, and just the market has to really digest all this information. But I think as we slowly move forward, at least I'm coming to the realization that whether you want to believe these numbers or not, the average of everything that people are guessing is moving to that bearish area. We're slowly creeping, whether you're an outlier or not, starting to get the idea that this crop is going to be fairly big. I mean, that planted acreage number is the 8th largest on record. So again, that's plenty of corn. And you alluded to the on-farm storage number, just a huge number, 809 million bushels more than last year for on-farm storage. And you think about what that does to this market. You have seen cash bids and basis stay strong because users are trying to drag that corn out of storage, but it's really messing with, especially you're looking at the funds trying to look at this market and decide whether they want to be long or short. You see that big amount of corn sitting out there on farm ready to be sold. And what's to be worried about? I mean, you've got a lot of planted acres sitting out there. You've got production concerns that you're not necessarily going to understand fully until we get further on in the year. And if we hit that 180 bushel yield number that we're kind of thinking 180, 181, I think you're looking at like 2 billion bushels of carryout again. So you can stomp your feet, you can be mad, but at some point you have to come to the realization that there is corn out there, and it's going to be a lid on prices for a while.
Yep, good point, Trent. Yeah, so as producers, the calls that I've been getting over the last week and a half have just been with the market going down with wheat. What can they do? They feel like they've missed out on some opportunities. They weren't really following the previous 2 years of crop failures and having to buy out contracts, roll contracts. They weren't as proactive as they typically are. So what are some things that you're telling producers as far as wheat price goes? What are some things they can look at? I know, Trent, you looked at some call options, and we're looking into some of the volatility on that. If you want to talk on that a little bit as well.
Yeah, so I've approached this thing in a few different ways. First question I have for producers is, how sold are you? If you were lucky enough that you trusted your production, you were able to make sales prior to harvest, obviously that was the right choice this year. But I'm never going to beat someone up over not doing that, because next year is going to be a completely different situation. What I think is important is to assess where you're at right now and not make a worse decision by prolonging this thing. If you don't have anything marketed yet, I'm generally encourage producers to think about, what are your main expenses, especially as we're looking. I think personally, I've had to write a bunch of rent checks and things like that. You're already starting next year's expenses. Mm-hmm. If you have to have cash come in, making cash sales at this price, even when you take basis levels off of that, I mean, most budgets, we've made yields big enough to break even or at least make a little bit of money on this crop. So then, exit some of that risk, lay that off. And if you're looking at replacing some of those bushels, there's a lot of strategies, all with inherent risks, that you have to understand when it comes to that. But just thinking about option volatility, with as wild as this wheat market has been, you do see implied volatility going up, and therefore option premium values going up. So, if that's a strategy that producers want to explore, we're always open to discussing that. But I think it's important to know the limitations there. And if you're kind of playing into this corn market and thinking that you're going to see something spark out of it, and I hear a lot of producers say, surely this thing's going to recover some, and I kind of raise my eyebrows at that. There's no guarantee that should ever happen necessarily with the numbers we're looking at. But if that is your belief, having a trigger value in mind, you can't just roll through and say we got to 610 on the September or 620, and you're sitting there trying to make a decision. I want to have that number in mind way ahead of time, that when we hit it, we sell, and we make these decisions and move forward, because indecision will allow you to miss rallies. And, in my opinion, if you're looking at a weather market, you're going to see stuff show up definitely in the end of July, and by the end of August, I would expect that we're going to know pretty much all we need to know. And then if you haven't marketed anything at that point, looking forward onto December, you're just hoping and praying that something is going to show up that's going to make prices go higher, which is a marketing strategy. if you can afford it. but again, having target prices is incredibly important. Matt, what's your thoughts?
I think hindsight's kind of a painful word at this stage of the game when you look at the wheat market. But if there was one thing that this last rally over the last 6 weeks that was driven by concerns over Russia's production, if there's one thing that really underscored, it was the value of having working offers out there. I think everybody saw that a lot of those higher highs were hitting the overnight session, and it's hard to pull the trigger objectively as the market's running up, and probably even more difficult as it's going down. But if you have those price targets hanging out there, that level of automation was a success story for a lot of farmers that I worked with in that rally time frame.
Yeah, good point. So what I'm hearing from you is it's about the plan, like having some kind of plan in place and not being as reactive to what the market's doing, going out and setting some price goals. And that's what we're here for. As an RMA team, Risk Management Advisors is our title. That's what we're here to help with. If you want to sit down with one of us and go over kind of like what your budgets are and set some price goals, that's what we're here for. So feel free to reach out to us. We appreciate your business and your patronage, and feel free to reach out to us if you need anything. Thank you.